Welcome back to the Deep Dive. Today, we're tackling something that's, well, genuinely got everyone talking. Bitcoin's doing this really unusual surge, almost completely on its own path, it seems, especially while the Nasdaq index has been, somewhat stagnant. So what's really going on here? Is this big Bitcoin rally built on something solid? Is there a genuine truth underneath? Or is it more like a deceptive signal, maybe even a bubble about to pop? That's the big question for our deep dive today.
It absolutely is. And looking through the sources you shared, that central question just jumps right out. Are we seeing something temporary, a kind of market blip? Or is this actually the start of decoupling, a real structural shift in the market? Just quickly, decoupling is when assets that used to kind of move together suddenly start going their separate ways. So our mission today is to really sift through the clues in these materials. We want to figure out if this Bitcoin rally truly points to a fundamental change, or if it's, well, maybe just another speculative frenzy. Let's unpack it together.
Okay, let's do that. Unpack it. So the sources kick off with some really interesting historical points. They take us back to the 2008 financial crisis. Stock markets were tanking, right? But gold, it soared, became that key safe haven asset. It's pretty striking how that behavior, investors looking for safety and uncertainty, kind of mirrors what we might be seeing now, isn't it?
It really does. And that historical echo, it's actually backed up by some very recent data points. Think about mid-July. The Nasdaq dipped slightly, maybe 0.2%, not much. But Bitcoin, it went up by 3%, crossed $120,000 for the first time ever. That's a concrete crack, you could say, in the usual link we've seen between crypto and tech stocks. They often move together. This is the sort of hard evidence that makes you think, okay, maybe decoupling is actually happening.
Right. So given that evidence, what are the experts saying? Because the sources make it clear. Opinions are pretty divided. You've got some blockchain experts arguing that this steady buying from institutional investors, that's providing real fundamental support for Bitcoin's value.
Yeah, they see it as a strong floor. But then you have this direct contrast. Many traditional economists are waving a red flag. They're saying, hold on, this looks more like speculative capital just rushing in. They see it as a risk because it's not really following the historical playbook, the way markets usually evolve. So there's this real tension there, a fundamental disagreement about what's driving this rally.
Okay, and this is where it gets, I think, really interesting. The sources bring in another angle. On-chain data. This isn't just about feelings or market sentiment. It's the actual transaction data right there on the blockchain. And it's showing some interesting trends.
Exactly. And if you connect that on-chain data to the bigger picture, you find something notable. There's been an increase in the percentage of wallets holding Bitcoin for the long term, HODlers, as they say, which naturally suggests less Bitcoin is actually circulating, less available to be quickly bought or sold, and there's more. The realized volatility, basically the actual price swing range over 30 days, it decreased down to about 28%. That points to a more stable trend compared to some of those crazy surges we've seen before. It hints that this could be a new kind of rally, maybe more stable.
So if we just look at those internal numbers, the on-chain stuff, it does seem to paint a picture of something maybe more solid, less speculative.
It certainly suggests that potential, yes. A more stable rally is possible based on those metrics, but, and this is important, they don't give us the whole picture. We have to ask, what else is going on? We still need to factor in things like that external speculative money flowing in and the wider economic uncertainties. Just like those economists warned about, it's really like two sides of the same coin. Both are crucial.
Right, two sides. And speaking of patterns, the sources bring up another decoupling example that really jumps out. Early 2020, the start of the COVID-19 pandemic. Global stock markets crashed, lots of fear. But Bitcoin, it surged then, too. It feels like a recurring theme, doesn't it? Bitcoin being seen as this alternative place to put money, or maybe a hedge when things get really unstable.
Absolutely. And that kind of volatility, whether it was back then or now, it's a real psychological test for investors. The sources mention this investor A's case. It perfectly illustrates this. This person apparently lost quite a bit panic selling during the 2021 Nasdaq crash. But now, in this current rally, they've actually used Bitcoin-backed loans to buy more. Yet, even with that move, they still admit to feeling uneasy, like a knot in their stomach. It's fascinating.
And, maybe you, listening right now, have felt something similar during these wild market swings. That anxiety, it's completely natural. The advice from the sources is pretty wise here. Try to stick to your principles. Focus on managing risk. Don't just react emotionally. And you see this reflected in the online comments mentioned too. Some are really sharp, quite funny actually. Like, is this a real rally or just retail investors headed for Waterloo, LOL? Or another one, escape Nasdaq if I get stuck with Bitcoin too. Next, I'll have to sell NFTs. You can really feel the mix of hope and nervousness in those comments. They capture the complex feelings perfectly.
They really do pull back the curtain, don't they? So, okay, let's try to bring all these threads together. We have the shift in historical patterns. We have the reported institutional money coming in, those stabilizing on-chain metrics we talked about, and the parallels with past crises. Putting it all together, the sources seem to lean towards this current Bitcoin rally being, well, closer to a structural decoupling, more towards Bitcoin maturing, becoming its own distinct asset class, maybe less tied to tech stocks, more seen as a long-term store of value. A fundamental shift, that truth we mentioned, rather than just another bubble. It's like the market is demanding investors really dig deep, trust their analysis, and hold on to their convictions even when it feels chaotic.
Okay, so just to be clear then, the analysis based on everything we've looked at strongly suggests this possibility of structural decoupling.
Precisely. A strong possibility, but, and this is a big but, it's not a guarantee, not by a long shot. Markets aren't just about cold, hard data, right? Collective psychology plays a huge role. Widespread fear or maybe runaway greed, that can push things in totally unexpected directions. So the real challenge, the important thing for everyone, is to keep doing your own analysis and stick to your own principles through all this noise.
That's a really vital point. You look for the truth in the data, in the structural changes, but you have to remember that collective feeling, that enthusiasm or panic, can cloud things. Today, we've really explored this complex mixed history, expert views, internal data, investor psychology, all swirling around this Bitcoin surge. So here's a final thought for you to consider. Given everything we've dived into, what specific next signal will you be looking for? What will convince you whether this decoupling phenomenon is truly continuing? Something to mull over.